Hey everybody, it's me, Gregory Mannarino. How are you today? It is Tuesday, July 25th, 2017. People, this is what's going on right now, and it's pretty profound. Let's start off with this. The US dollar, once again, is getting slaughtered. A trend that I've been outlining for you for weeks upon weeks with no end in sight here. This is the Federal Reserve who has promised to melt down the dollar. On top of that, we have a Federal Reserve, for which we're going to hear from this week, who has promised to keep their foot on the floor with regard to pushing the stock market higher. So two net positives right now. Easy monetary policy for as far as the eye can see. Janet Yellen's 180 with regard to her stance on monetary policy again moving forward. Remember how she was so like, we're raising rates, we're going to do this, and now it's like, oh no, we're not going to do that anymore. So the stock market, in my opinion, has nowhere to go but higher. As a matter of fact, earlier today, I wrote an article on my Steemit blog, which I really hope you're paying attention to. If you're watching this on YouTube, there is a link to my Steemit blog in the description of this video and in the comment section where I write articles. I wrote an article this morning outlining what's going on here with the stock market, again, in light of everything that we're seeing with regard to the Federal Reserve, who has promised to create even more distortions than we have already. This dollar getting crushed right now, and we're seeing that rebound in cryptocurrencies. And let me just say this, we should be seeing in a real market gold and silver ripping higher. We're not seeing that, but we are seeing crude oil rip higher. Why? Weaker dollar is commodities positive. In a real environment, we would see gold and silver up much higher. They are determined to keep them suppressed, the prices of gold and silver, for as far as the eye can see. As long as they can get away with it, again, and the regulators, they turn a blind eye. They don't want to hear about it. They're going to let these major banks play their games, and we can play the same game. We know what we need to do. We see this kind of action in the metals market, means we need to be acquiring more of it. We need to be betting against this debt and becoming our own central bank. Now, with regard to the weak dollar here, inflation is going to start rearing its ugly head. We're already seeing with regard to crude oil, it's going to start pushing gasoline prices higher as well. This is going to bleed off to your food and everything else. So the Fed is going to hit their inflation targets like they've been promising them. How many times have you heard me cover the fact that the Fed keeps missing their inflation targets over and over and over and over again? It seems they're getting serious about it. Look what they're doing to the dollar, okay? This is going to create inflation, which means your life is going to get harder. Mine too, to a certain degree, obviously, as well. It's just incredible. So what we can expect moving forward here, people, is the stock market to continue to move higher. I'm not saying it's not going to pull back here or there, but it's going to continue to inflate on the back of the debt bubble, which is going to continue to inflate too until it doesn't. All right? You know what that means if you follow this blog here. It's just so, it should be clear to you what you need to be doing. So just real quick, going back to the stock market, yesterday in the video I had done, in an article that I wrote on Steemit, I said watch for a rotation back into the financial sector. I even put up a specific position on my website, traderschoice.net, yesterday. As I am doing this, that position that I took up yesterday is up more than 20% in less than a day. So you can see that I'm a happy guy today. My Disney trade, unbelievable as well. Now, what we need to do for you lions that trade out here is keep your eye on tech. Again, I wrote about this earlier on Steemit. Once this financial trade plays out and we pull profits, we're going to pull fat profits out of that. We're going to look to reallocate back into tech. I think tech is going to be a driving force moving forward. It's going to push the whole market higher until it doesn't. Again, you know me. I don't look for crashes anymore. I don't care. I don't care where the market goes. It can go to Dow 50 billion. I don't care. Or it can go to Dow 0. I don't care. I just want you and me to capitalize on it. I don't want to sit here and you know, there's so many people out here who are trying to pinpoint dates. Oh, it's going to be on this day at this hour. Who cares? Who cares if that's right or wrong? I just want you and me to capitalize on it. And the biggest core part of that is becoming your own central bank, betting against the debt. Use the system against them. They want to play with gold and silver prices? Well, we know what we need to do. Acquire more and more and more of the hard asset. They want to push cryptocurrencies all over the place, try to shake out weekends. You remember what they tried to do? I told all of you, I said, don't let it happen. Don't let them push you out of this stuff. And look what's happening now. We're bouncing right back, and the move for all of this is higher in this environment. As the dollar drops, it's stock market positive, it's commodities positive, it's cryptocurrencies positive. So I can't imagine you'd be getting better advice anywhere else other than on this blog, because it's all been playing out exactly correctly. With that said, I hope you've enjoyed this little segment, and I will see you tomorrow.